Thanks for joining us, as ever.
My pleasure.
Good stuff. Now, we see that markets are markets are very mixed at the moment. Just give us your assessment of how you're seeing markets at the moment.
Alrighty. It's basically, I would say, very much a grind, certainly in terms of the local market. Slow, steady progress. I think we're probably up about 6% on the year, but I mean, gains are quite easily given back. And I mean, looking at the JSE, well, it's been a bit of give and take. I think part of what's rescued the JSE this year is the level of international earnings in it. I mean, it's more than half the index. But certainly the environment such as higher floating interest rates, bit of currency concern vis-a-vis the rand, that sort of thing has generally kept a little bit of a dampener there. And obviously markets also looking for a little bit of further political clarity. I mean, it's a noisy year between now and year end, and that makes for quite a difficult breakout. I think we're going to see a lot of sideways on the JSE.
Yeah, I was going to say, really, when we speak about the rand, if we see a trend of firming in the rand, as we have been seeing of late, it seems as though the market is going to be sideways because, as you say, rand hedges benefit from a weaker currency.
Absolutely. The other spoiler, of course, has been commodities generally have been quite soggy. I mean, from the beginning of this year, CRB commodities index is down around about 7-8%, and that isn't helping the rand or our markets either. So it's generally a damper picture there. Maybe we'll see a little bit of pickup and stabilization in China. I mean, we're looking for more news on what's happening with that banking sector and that economy and how they're going to continue transition, which is a long grind out. So yeah, not a lot of new news coming from that front either.
So in the meantime, with this sidewaysness, when people or investors really want a return on their investment, what's the investment strategy for now?
Well, I think broadly they need to look at investments that are first of all reasonably safe and secondly have a reasonable payout. So if you can't get earnings through share price growth because earnings are growing like crazy, then you've got to look at a decent dividend yield, one, and two, you have to look that they're coming from a company that's got a decently solid balance sheet, isn't too over indebted, and can defend itself and maintain its financial stability in somewhat tougher times.
Now, my colleague Nzinga mentioned in her introduction about the British pound dipping by 0.5%, and this on the back of the Conservatives sort of losing their lead in the polls for the 8th of June poll. Now, if things go horribly wrong for Theresa May, does that now compromise the Brexit process? Or given the fact that Parliament has voted for it, whoever does take over would still have to pursue it?
Well, I think, first of all, a plebiscite like the Brexit vote itself isn't legally binding under British law. To make it binding, it did have to go through Parliament, quite right. I think as far as the Conservatives go, even if they have a little bit of a setback, I mean, the timeline is now short, and frankly, that lead that they have is overwhelming. I mean, they're looking at least 390 seats, well ahead of the 326 that they need. So I should be very surprised if we have anything other than a Conservative outcome.
Okay, we shall see. And then Impala Platinum, they announced yesterday that they're going to go to market. They want to raise $500 million by selling bonds, basically borrowing money from the market, in order to service existing debt. Now, that sounds very dodgy, whether that's at a micro level or at a bigger level. What do you think about this strategy of theirs? And obviously, shareholders were not very happy about it.
Okay, what they're looking at there is, first of all, they have a so-called convertible bond that's expiring within the next year or so. And what they need to do now is they need to basically refinance it. So hence, they're raising borrowings via a convertible bond. Now, in a company that's in such a volatile environment as they are, platinum prices have been, first of all, rather low, and secondly more volatile than any of them would like. I guess they're in the situation where they would like the debt to be non-callable or non-recourse, and from that point of view a convertible bond issue is actually quite a logical way to go. The other point is that they have quite a few shaft developments that they need to push on with to keep a long-term sustainable business, and they can't, I mean, it would be easy to just cut the capex and say, right, let's not do it, but down the line, I mean, both employment and the overall profitability of the business would take serious pressure. So I think the way they're going about it is probably the most prudent. Yes, shareholders don't like it because the shares are effectively quite cheap now, but I can't see a better way for them to go, frankly.
But do you believe in platinum or PGMs? Because we've seen that it's not only Impala Platinum having a difficult time. Lonmin has also been, burning cash, as you've mentioned before. The only positive one seems to be Sibanye Gold, which is actually buying PGM assets in the US.
There's a lot of wild cards around platinum. I mean, for example, where do alternative fuel go? Solar versus petrol engines. Do fuel cells, which involve platinum, have a future? So all of this throws into the mix, and then of course the fact that most fuel engines these days are more fuel efficient. On the counter side, I mean, the SUVs have taken off substantially on the Far East, so that generates a big new interest for petrol engines. So platinum's a real wild card at the moment, but I think there is a future of sorts. I mean, it's definitely a useful metal.
Okay, we're going to leave it there. We've run out of time. Thank you so much, sir.
Pleasure.